Hello guys, you're most welcome to Market Insights for this week. My name is Wanyana Michelle and I have my colleague.
Matthew Mugabe.
Yes. There are a number of things that have happened in this month of August, and one of them that we want to talk about is a Monetary Policy Committee meeting that took place on 13th August. Let's dive into the key pointers that happened in that meeting. So we look at certain measures that the government has decided to take upon the given changing macroeconomic indicators. We look at the central bank rate being maintained at 9.75%. We look at the cash reserve requirement, which was changed, and want to understand what exactly do they look at in adjusting one and maintaining another. Yes, Matthew, what do you think about that?
So something interesting to note is that the central bank rate was maintained at 9.75%, which has been the same since October of 2024. And I remember something interesting about the Monetary Policy Committee meeting was that a journalist posed the question that is the cash reserve requirement a better metric to watch than the CBR when it comes to how we should expect and watch the government as it leads the country's economy into the next steps. And what I found interesting is what the governor responded to that. He mentioned how it's a better measure of changing liquidity in the short term because you see there have been many market changes that have occurred. When you look at the war in Iran, when you look at the different changes in oil prices, it's been so many factors that need some form of stabilization. And the central bank rate would take longer time to implicate rather than the cash reserve requirement because that directly impacts banks and how much they can lend out. So the Monetary Policy Committee, I think, was very eye-opening. And it's something that I think the viewers should take time to find out insights on, as they understand and plan on how they want to lead their finances. And so, yeah.
Okay, thank you so much, Matthew. That's actually something key to note. Feel free to look at the monetary policy statement that was issued. Another thing that I'd like us to discuss is the bond market, right? Not just in Uganda, but stretching to the world, stretching to the US, Germany, Japan, how yields are rising and yields happen to be falling in Uganda. Want to look at, is it the different economic conditions in the different countries? What exactly is happening in that space? What exactly does it speak to for an investor, right? Yeah. What are your thoughts on that?
Thank you, Michelle. I think it's very interesting because we as Ugandans sit in Uganda, but everything that happens around the world continues to impact us. If you take a look at the treasury yields, the fixed income yields around the world, in the global markets such as Japan, the US, Germany, we've seen that yields are reaching all-time highs. And that's because of many factors. But I'd say the biggest thing is the demand for capital. There's a lot of demand for capital from companies and corporations. They are looking to finance themselves through debt. And at the same time, you also have the governments. Governments are also looking to finance themselves. And then lastly, you have the AI hyperscalers. There's this new age of AI that I think we're going into, whereby it's currently well adopted in most, or if not all, companies, individual spaces, and the global market as a whole. And so we're moving more further away from the stage of adoption into now implementation. And the AI hyperscalers have started to recognize that. And so that demand for capital means that we see that yields are rising in order to compete with the demand for capital from these other sources, from these other companies and whatnot. And so I think it's very interesting because Uganda poses something different, yeah? Our last bond auction and the bond auction over the last years since mid-June have continued to show lowering yields. They are giving you lower interest rates on your bond investments. And that's because, number one, the government has been able to collect as much capital for the investments that they want to make. And then number two, inflation. Inflation in Uganda has been well maintained by the government in that it has stayed below their 5% threshold. So even though we see fuel and food prices rising, we still see some level of maintenance in the actual cost of living in Uganda, whereas in other countries it's been rising. So we have such an interesting global picture, but at the same time, when you look at things on a local term, I think we need to maintain our confidence in what we've decided to do as a country, and then let the country move together as one. And so yeah, that's my opinion and what I think we should do next. What do you think the debt picture is for us as a country?
So looking at this financial year, what was issued out is our public debt has increased. We look at it being 52.7% of the GDP. So what does that mean for the local investor? So our debt has increased, yes. That means government is going to issue out, in each bond auction, they're going to issue out bonds cautiously. What does that mean? The yields are going to be slightly lower, right? Because yes, they need the money, but they're going to borrow money from the public cautiously. That's the behavior that we project is going to happen given the statistics. So that's what the local investors should look at while taking part in these bond markets. Yes, then look at the debt financing being projected to the oil projects in Uganda, right? It's not necessarily, don't necessarily borrow for consumption, but looking at injecting that money into money generating activities, right? And as I've mentioned, the oil projects. What could be those oil projects that we have invested in?
It's a very interesting question. In terms of oil projects, we have the Kabale refinery in Hoima, which is estimated to produce 35,000 barrels per day. And why that's such an interesting figure is because the oil that is coming from Kabale is apparently supposed to be semi-waxy, so kind of like shoe polish is what I was told. It's a shoe polish kind of substance, which will mean that the refining process may be a bit more lengthy. But in terms of the government's projects, I know that the groundbreaking is supposed to happen soon in the next coming months, which leaves us with such an interesting thoughts that oil is actually feasible, because this is a project that goes back many years from when we first did a survey on whether or not it'd be possible to pick oil from within the country. And so, yeah. Are there any other projects that you know of or think about?
The other projects that we could be looking at are the massive road repairs and constructions, right? Because yes, we're investing in the oil projects, but how is that oil going to reach up to the point of our local petrol stations, right? And then another thing that we can look at is AFCON, right? Since Uganda is going to be among the hosts, that's what majorly is speaking to our increase in debt, right? To finance these different projects. Yeah.
In conclusion, I think what we can say is that Uganda is in for an interesting month and close of the year. For the month of October, and in general, we look to see a lot of financial market deepening, because to sustain all these things that we're trying to do, we have to grow the country and the region as a whole. So stay tuned to what Cornerstone can provide to you, and thank you. My name is Matthew Mugavi, and with my co-host,
Michelle Wanyana.
we wish you a blessed week.